Let me blow your mind for a second. The most powerful financial advantage in the world has nothing to do with stocks or secret investments. It's a loophole, a perfectly legal, three-step strategy that allows the ultra-wealthy to live off their fortunes, grow their wealth exponentially, and pay virtually $0 in income tax. By the end of this video, you will understand exactly how they do it. Most people play a simple financial game. You earn money from a job. The government takes a large slice of it in taxes before you even see it, and you live off what's left. If you're lucky, you invest some of that after-tax money. But when your investments grow and you sell them, you get taxed again on the capital gains. It's a constant battle against taxes that you are designed to lose. A financial treadmill where the speed just keeps increasing. Sound familiar? But the wealthiest people, well, they refuse to play this game. They understand a fundamental secret, you see. The tax code isn't designed to punish wealth. It's designed to punish income. This brings us to the strategy that the law professor Edward McCaffrey famously coined, buy, borrow, die. And it all starts with step 1, buy. But not just anything. The goal is to buy appreciating assets. These are things that are expected to increase in value over time without necessarily generating a lot of taxable income along the way. Think stocks in growth companies, pre-IPO shares, real estate in booming areas, fine art or collectibles. The key is that as long as you hold these assets and don't sell them, the growth in their value, the unrealized capital gains, is not a taxable event. A portfolio can grow from $1 million to $10 million. And as long as nothing is sold, the tax bill on that $9 million gain is zero. That's right, nothing. This is the foundation of the entire strategy, accumulating wealth on paper, tax-free. Now, you might be thinking, that's great, but how do you pay for anything if you never sell? And this is the engine of the entire system. Step 2, borrow. Instead of selling their appreciated assets to generate cash for their lifestyle, the wealthy use their massive portfolios as collateral to take out low-interest loans from banks and brokerage firms. A bank is more than happy to lend millions of dollars at a very low rate when it's secured by a $100 million stock portfolio. The loan proceeds are not considered income, so they are completely tax-free. This is how billionaires can fund mega yachts, private islands, or even just their daily expenses without ever creating a taxable event. They are turning their on-paper wealth into real-world cash without selling a single share. The math is simple. If their assets are appreciating at 8% per year and they can borrow against them at 2% interest, they are effectively making 6% on the bank's money, all while their original assets continue to grow untouched. Think about that for a second. They are getting paid to use the bank's money to live for free. How is that even possible? This cycle of buying assets and borrowing against them can continue for a lifetime. But the final and most powerful part of the strategy is step 3, die. This sounds morbid, but it's where the biggest tax advantage is unlocked. Under current U.S. tax law, when a person dies and leaves their assets to an heir, those assets receive what's called a stepped-up basis. And this means the cost basis of the asset, for tax purposes, is reset to its fair market value on the date of death. Let's make that simple. Imagine someone bought a stock for $1 million and it grew to $50 million by the time they died. If they had sold it, they would owe capital gains tax on $49 million of profit. But because they held it until death, their heir inherits that stock with a new cost basis of $50 million. The heir can then sell the stock the very next day for $50 million and pay absolutely zero in capital gains tax. That entire $49 million of appreciation just vanishes. Legally and permanently erased by the tax code. It is the ultimate loophole. When you put all three steps together, buy, borrow, and die, it creates something more than just a strategy. It creates a perpetual wealth loop. The family buys assets. They borrow against the growth to fund their life, tax-free. The assets continue to appreciate in the background. When the original owner passes away, the heirs inherit the assets with a stepped-up basis, wiping out all the capital gains. The estate may sell a small portion of the assets to pay back the loans, and the cycle begins again with the next generation. This is how generational wealth is not just maintained, but compounded. So while you're on the earn tax spend treadmill, the wealthy are operating on a completely different track. They're playing a different game entirely: accumulate, leverage, transfer, transfer. Now, it's important to understand this strategy is not without risk. It relies on the assets consistently appreciating faster than the loan interest. If the value of the collateral drops significantly, as it did for the founder of Peloton, the bank can issue a margin call, forcing the borrower to sell assets at the worst possible time to cover the loan, triggering the very taxes they sought to avoid. This strategy is primarily a tool for the already wealthy who can withstand market volatility and have access to the most favorable lending terms. For most people, the direct application is limited. But here's the real secret: the mindset is universal. The core principles, prioritizing asset ownership over earned income, understanding the power of leverage, and making every financial decision with a long-term tax strategy in mind, are the fundamental building blocks of wealth at any level. So while the average person is focused on how to earn their next dollar, the rich are focused on how to make their assets work for them and how to structure their wealth to legally minimize the bite of taxes. They've stopped trading their time for money and have started playing the long game of capital. Understanding the buy, borrow, die strategy isn't about being angry at the system. It's about understanding the rules of the game so you can start playing it better. If you found this explanation valuable, hit the like button and subscribe for more insights into how money really works. This isn't just a strategy, it's a completely different operating system for money. Now that you know the rules, you can never unsee them. So let me know in the comments, what's the one rule you're going to start applying to your own life, starting today?